Hey folks, Mark here for another Redbelly Insights episode, and we've got a great one ahead. It's speaking with Jim Chu from Embed Finance, and we learn all about embedded finance, the lessons and how that came about, and how it's using blockchain technology in a really useful way, I would say. A lot of the things that we've seen in blockchain have been more around the hyped up areas, but this one really dives deeper into one of the aspects that I think is often forgotten, which is the data and reducing risk sort of angle. So really interesting insights that we're going to learn about here. And before we continue, because this AMA is for informational purposes only, we need to remember that Redbelly Network is a blockchain infrastructure provider and does not endorse or promote any financial products or investment opportunities. All opinions expressed are those of the speakers. Please do your own research and comply with applicable laws in your jurisdiction. And with that out of the way, let's get to the show. Welcome back, folks. It's Mark here for another Redbelly Insights episode. And I've got a special guest here, Jim Chu from Embed Finance. How's it going, Jim?
Good. Very good. Thank you. Thanks for having me on.
It's early morning over there in San Fran, where you're at. Sorry, it's early morning here. I've got the times mixed up. It's topsy-turvy. It's afternoon over there. But thank you very much for joining us at this time. I think it'd be great for the audience who may not have seen Embed just yet, or even if they have, just to get a bit of background from you. What led to the creation of this? What's your background?
Oh gosh, yeah. So I have a long storied background. 90s at Stanford, early 90s at Stanford in Silicon Valley, and then I got into philanthropy after about another decade in the 2010s, 2000 knots. I'm sorry, in investing. And around 2010, I got into philanthropy, and I thought, like many do, that if you want to change the world, you volunteer, you give your money away. But I started to realize pretty quickly, or I concluded that the best way to drive change was to get capital in the hands of entrepreneurs. And so that led me onto this impact investing slash um, impact business journey that I'm on today. And that's really the impetus for where EMBD came out of. We initially built a platform for impact investing in
Mhm.
emerging markets, and then realized that the technology infrastructure that we built, really a digital securitization infrastructure, really served all overlooked markets. And that's where we're trying to direct EMBD.
Fantastic. There's definitely a lot of untapped potential there. And speaking of untapped, some people might know you from that. What's the short elevator pitch, I guess you could say, for EMBD?
So yes, EMBD, we're really trying to take real yield that's coming from businesses that have digitized and are using mobile payments, digital payments in their businesses, taking those digital revenue streams and making them available to digital investors, to digitally savvy crypto native investors. So we're really trying to bridge that gap between stuff that's happening in the real world that's really exciting and increasingly digital, and the digital finance world that's already there in terms of the desire to see efficiency and transparency and security through digitization.
Fantastic. I think, prior to this, we were prepping and doing some calls to understand a bit more. Also, for folks that are watching, there's prep in terms of agreeing to the questions that we said. And one thing that was really interesting was you sent me a couple of articles that really dived into things, and it made me want to focus more on this digital intermediaries part. But since this work that you put out there and will show in the show notes on digital intermediaries, are we finally seeing things like data, payments, and capital start to align? Or yeah, where is that at?
Mm. That's a great question. So I think what we're seeing, what we're trying to short circuit really is that transition, the exact transition that I think you're alluding to. So the traditional finance world is still working in the traditional finance world, right? If you're going to get a loan from a traditional financial institution, you need collateral, you need very traditional financial reports, you need a credit rating from a traditional institution. Now, all those things are great and useful and necessary. But what I would argue is that in the digital world, the digitizing world, there are all these new tools for managing risk that those institutions may not be fully utilizing. And like the introduction of any new technology, the new technology brings new ways of doing things that incumbents can't really truly integrate into their existing business models. Now, whether that be, I so I'm going to age myself here, but in the mid '90s, when you ask a newspaper, "Hey, so how are you using the internet?" It's like, well, of course we're using the internet. We're putting our newspapers on the internet. We're really on the cutting edge there, right?
Yeah.
You don't realize until Twitter comes along or Craigslist comes along or even
Yep.
Facebook that it's the new features of the technology that change journalism.
Mm,
So I think that's the shift that we're seeing. And rightfully so, the traditional financial institutions need to work the way that they've
mm,
always worked. But there are all these new tools that,
mm.
well, you have to create a new way of doing things in order to fully utilize and fully exploit.
It reminds me of, there was a certain fellow that, put radio on the internet, and
Mm,
next thing you know, he's on Shark Tank, owning the Dallas Mavericks. People can figure that out, and the Silicon Valley TV show, the TV series, the comedy, one of the characters does something similar, but you're absolutely right, like,
yes.
when we had cars, the first couple of cars were complained about because they didn't work well on cobblestone roads, but
Right.
when the roads were paved and things started to emerge and new features were made easier. And I think we're starting to see that. So it's great that you think about it that way because there's a ton of stuff that is more capable of being done thanks to these new technologies. And going from,
Hey,
let's,
can I just let me
yeah,
give my
please.
comment there is like, and sometimes, oftentimes, I should say that
Mm,
you actually have to reinvent the business model in
mm,
order to fully appreciate the technology or fully utilize technology. And I think, Yahoo and Google are great examples of that, right?
yeah.
Sure, you can do banner ads, but when Google came along with better search technology, um, what did Yahoo say? Well, why are you sending people away from your media property? Doesn't make any sense. Now, it took some years for Google to even appropriate the pay-per-click model, but
Mm,
once that was in action, everyone realized how much better it was and
yeah.
completely wiped out the banner ad model. And so if Google had just sold to one of the incumbents,
Mm.
it wouldn't have well, it would have taken them much longer for pay-per-click and intention-based advertising to take off in the marketplace.
I think people don't realize just how lucky we are to live in a timeline where people, such as Sergey and Larry, did not
Yeah.
take the massive amount of cash that was thrown in front of them. Had they done so, arguably we could be years behind, and many other technologies as well. But technologies are it, stuff that's said and seen out there. There's in our space, we see a lot of buzzwords, and I think we need to go like avoid the buzzwords, move towards the backbone side of things. You said that embed finance is reshaping how credit flows. You mentioned that in your articles, the web. That I see, like I get a spider's web kind of sense when I read the digital intermediaries kind of blog. Um, Platforms own users. Let's say, that's how it is now. Intermediaries underwrite and capital markets fund. Now, how does Embed bring that a new kind of model to, say, emerging markets? What are your thoughts on that?
Yeah, so in one sense, we're really playing a very small role in the whole picture. So we're not trying to create a whole new market, right? That market already exists, and I would argue that market is the embedded finance revolution that we're seeing very quietly happening around the world. We're going to take a bit of a digression here and encourage people to Google the Bain and Company report from 2022. It's already a little old, but 2022 on embedded finance.
Mm,
And I'll try to summarize it, at least in the context that's important for us here, on some of the things that they concluded. One was that there is a complete reshifting of the value chain of finance. So in the old world, it was bank lends to business, done. Simple, right?
mm,
Bank lends to individual, done. But with the digitization or the embedding of finance into platforms and existing work streams and services, that's changing. And the role of the intermediary there, the one that actually maybe owns that platform or maybe even provides financing to that platform,
Hmm.
it's introducing new value that can sit between the old bank and businesses. Or actually, rather, and I'll give you an example in a second, the old banks and new customers that were
Mm.
previously unserved. So the example from that report that I absolutely love is how a company called Paraffin, San
Hmm.
Francisco-based company, is serving through an app called MindBody. So MindBody is essentially an app where you book yoga sessions or Pilates sessions and so on. It's like a POS system for
Oh, okay.
yoga studios, right?
Yep.
But Paraffin would create an algorithm to give these yoga studios and Pilates studios instant loans based on the data
Mm.
that they have and based on the digital payments they were collecting through the app. So now Paraffin can provide all that data, aggregate all these essentially small businesses, and
Mm.
make that available to Jeffries, an
Uh-huh.
investment bank
Yep.
that is lending to these yoga studios and Pilates studios through the Paraffin MindBody platforms.
Amazing. I've thrown it up here, the article and the links just below streaming across, but we'll throw it in the show notes too. But yeah, really interesting. I saw how they mentioned mind, body, and a few other things in here. And you mentioned Jeffries. What's interesting is that I was literally at a conference yesterday with I was moderating a panel on digital assets, but the rest of the people around, apart from us five, were majority 90% were capital markets, traditional capital markets, exchanges, fund managers, advisors, and brokers, etc. And everyone, like, this is like probably the biggest kind of audience. Like, it drew the crowd because people are looking at this new technology and seeing BlackRock and Franklin Templeton and others trying to do something here. So I think the embedded finance thing, make sure, folks, if you're watching, to click on
Yeah.
this and get into this, because this was from when? Was it 22?
2022. Yeah, I
5 years?
mean, look,
Wow.
and so going back to what we're about and what we believe is the big opportunity is that's happening more and more so everywhere around the world,
Mm,
and I call it the digitization of real world economy, right?
yeah.
You know, 20 years ago, the only way a yoga studio can get a loan was probably through their friends and family. The only way a Jeffries can get involved in financing Pilates studio is through some kind of PE roll up,
Yeah. Yeah.
right?
Yeah.
That's it. But now they can do it through these digital intermediaries that
Mm,
are basically unlocking new markets for traditional financial institutions. Now, how is that relevant to Redbelly and Web3 and digitally savvy? Well, what's happening is a little bit like that newspaper slash internet example I gave, right? So
mhm,
you can take all that digitalization that's happening on the ground and say, well, let's make it available or um, palatable to the Jeffries of the world. You can do that.
mhm,
And that's people are doing it, and that's good. There are a couple of public companies that do that now. I mean, it's worked, right?
mm,
Where I think the biggest opportunity is like a Twitter or a Facebook is actually changing the whole value chain itself. So now you can say, oh yes, we have digital revenue streams from these yoga studios. Yes, you can go to Jeffries and package it up in a way that makes it okay for them. But you could also take the really unique features of the digital revenue stream, its efficiency, its
mm,
transparency, its immediacy,
mhm.
its security, and create a financial product that is then made available to digitally savvy, digitally
Yeah.
native,
Yeah.
crypto native investors. That a Jeffries will look at and say, "Oh, that's neat, but I don't really care."
Mm,
For
mm.
an example, right? Jeffries is not going to care about a 1 month lockup product.
Yeah.
Like
Yeah.
well, I have my own stuff to deal with or you work with, but that actually does matter to a crypto native investor.
Exactly.
So the ability to sweep these digital payment accounts directly into a USDC wallet because it's all digital. I mean, the way I like to describe it is that these real world embedded finance businesses have essentially created smart contracts in the real
Yeah.
world. Right? And all we're doing really, and that's why I say what we're doing is just a
Mm,
really small slice of it. We're just connecting. and validating and aggregating the quote unquote smart contracts on the real world side and turning it into smart contract ready flows for the digital finance side.
Love it. I think it's a great thesis, and it's a really great use of the technology, bringing it all together to solving this problem. Now, in all of this, like, and we're obviously here because we're talking about Redbelly, but where does Redbelly fit into this value chain?
Yeah, so I think it's important that, I mean, look, as somebody, I'm not a Web3 expert. Yeah, I come into this and people get, Jim, 95% of the stuff that's in the crypto world is just BS. It's a scam. And I say, okay, yeah, okay. But like in any new industry, there's always going to be, especially when you deal with finance. But I do think that it's moving more and more into institutional grade products and institutional grade infrastructure.
Hmm.
And I think that's what Redbelly is, right? It has a identity aware infrastructure that is has finality in terms of its transactions. It's a great settlement layer for institutional transactors,
Hmm.
and so those are the type of networks and chains we really want to work on. You know, I think someone said you should just create our own layer ones. Like, what? But that's not our thing, right?
Yeah,
We don't do that, and we did. I guess there's some gosh, tokenomics upside or something like that,
sure.
but
Yeah.
people have already built it. So folks like Redbelly have already built these institutional grade settlement layers, and that's who we want to work with because as the digital finance world becomes more institutional and more established and more regulated and more trustworthy from a pure infrastructure perspective, we expect to see a lot more institutional capital come in, but also seeking less speculative, more real, I should say, sources of yield.
I think that's it's fair to say that, the journey is not just like Red Bellies alone or like the partners that build on top of it alone, like any kind of good ecosystem. You mentioned Google before. It took some time for that visionary kind of view of ad spending to change. And I think it doesn't change. Like, there's a part where it goes from idea into reality, and there's a part when it goes, yes, it's reality, but it's not reality for everyone. And there's these stages that take place, but you have to go on that journey, otherwise it never happens.
Concierge, right? Yeah.
People,
I mean,
people,
just
yeah.
going back to the Google example, right? I mean, before Google, actually, you could argue that Google
Mm,
stole the business model from Overture, which was,
yeah.
prior, and Overture didn't, succeed in the sense of the world like Google did.
Mm,
So, why didn't Overture? It just didn't have the fiscal oomph, right? It
mhm,
didn't raise as much capital as Google could, nor did it have the differentiated technology to really make it work. So um, it's not a straight line. Progress is not a straight line.
yeah.
Even our journey, right? We built this to apply to the impact investing world. I
Mhm.
would argue that it was not ideal in applying it to the impact investing world. But now we are learning from all the things that we did right and wrong, applying it to the impact investing world and doing it in a more global sense.
Yeah. Oh, absolutely. I think that's people need to really resonate with this, because to be in Web3, you've got the one side which is just full of lofty expectations in a very short term kind of way. And then there's the reality, somewhat grim, but I would just say it's just reality. This is just how things work. If it's grim if you're looking to make money in like 30 days, it's not so grim if you look at the progress of how fast that this technology is moving things versus how long it would have taken on old rails. But in any case, we could completely digress over there. I want to get back to this. Let's call it the missing middle. But we'll get you back on. We can talk about the history, I reckon, of like Silicon Valley and like technologies and stuff that you've seen over your time, given your storied investment history. But going back to the untapped story, what I like to call the missing middle, you've highlighted like a $5 trillion gap for SMEs. Let's call it, they're too big for microloans, they're too small for VC. How does embed finance like
Yeah.
tap into that missing middle differently differently from traditional lenders or other institutions?
Yeah, I mean, look, it can be a very complicated story, so I'll just zoom in on one part of it, which is,
Hmm.
let's just talk about credit and how credit usually works. So credit usually works because you have enough information and collateral to be able to
Hmm.
give it to somebody. And as I joke, it's, "Hey, Mark, you want $1 million? No problem. Happy to give you $1 million. Just show me that you have 1.5 million,
Yeah.
and we'll pay lawyers $100,000 to
Yeah.
write a piece of paper that makes sure that if you run away with my 1 million, I'll go after
Yeah.
your 1.5 million." So you can imagine that that doesn't work so well when there aren't people with enough scale to make that work,
Hmm.
and with the collateral and the paperwork to make it all work.
Mm.
The missing middle is a little bit of a misnomer because it's actually a missing huge market gaps everywhere. It's not
Yeah. Yeah.
just everywhere, right? So I would argue that most small businesses around the world don't fit in anywhere, don't fit into this picture very
Yep.
well.
Yep.
And some governments do a better or worse job at trying to promote it through guarantees and whatnot, but generally it's poorly served. And um, one way to deal with it is by giving people really high interest rate loans to
Yeah.
deal with the risk,
Yep.
right? Yeah. But the other way to do with it now that digitization has happened is to actually use the data coming from the yoga studios and the Pilates studios
Mm.
and use that data
Mm.
to complement the other usual ways of assessing risk
Hmm.
and create different models of lending that can then make those markets available. So let me just give you an
Wow.
example. Um, so instead of doing, the example I gave you, so Mark, you
Hmm.
want $1 million loan. Okay. Maybe you don't need to show me you have 1.5 million, but
Hmm.
maybe you need to show me that you have revenue streams of $1 million, or 1.5
Yeah.
million dollars. Okay, good. Awesome. Is that enough? Well, for a typical bank, no. Why? Because you could still run away.
Mm.
All right, well, so how do we make sure that you can't run away, or if you do run away or something happens, we can still capture some of that? What's the security? And not just collateral as security. What's the security? Well, but if you are collecting all your revenues through Stripe or through PayPal or whatever equivalent there is in your country, then we can actually start collecting that every day. So
Mm.
instead of you making a payment to us in 6 months, we collect it
Yeah.
every day. So
Yeah.
that reduces your risk. So
Absolutely.
now it's less about, well, will he collect 1.5 million over this next 12 months? It's, well, as long as he's collecting um,
Yeah.
1.1 million or 110,000 a month,
Mm.
and
Mm.
I'm getting 50% of that, and I'm collecting it automatically, well, my risk has been reduced.
Massively. It's like the heartbeat. As long as we can see the business pulse is still pulsing.
Yeah.
Man, it's interesting because you can only do this through blockchain technology, or you can only do it. I would argue securely. There's a lot of debate, like why don't you just do a database? Well, databases can be tampered with, and blockchain is the payments plus the data in a nice little smart contract package that you're able to do this. Had a we had a project where it was like, because what you're speaking about here, it really taps into being able to mix things together and monitor in a way you couldn't before. There's a project that Arturo, my colleague at Not Centralized, is working on with Redbelly in the Middle East, where it's all about um, Department of Education and Labor being able to see uni student credentials, as in what are the courses, what are the grades, how that's going. And if you think about the labor side of things, if you tap into that, you're able to see in real time, okay, we have these sorts of skills, and then the labor demands of the economy there will be, we need these sorts of skills here. So is there a skills gap? Well, you can see it in a bit more real time, not exactly real time like a loans maybe every day, but like arguably that you couldn't do this without this kind of tech. So I love that example because that really speaks to what this thing can do, right?
Yeah, indeed. And I think one caveat here is,
Mm.
I think for quite a while, quite a long time since the beginning of the blockchain revolution, people
Mm.
have been imagining the trickle down of blockchain and this, trustless, verifiable, transparent system all the way down to the ground,
Yeah.
all the way down to a mom and pop store using Bitcoin to buy and sell.
Hmm.
I think what we've seen is that um, blockchain and crypto, which is really just an application of blockchain, create real revolutions on one side of the ledger
Mm.
in the management of capital and the administration of capital, movement of capital, who can invest, etc. But it hasn't trickled down to the mom and pop shop.
Yeah.
And we can argue on why it hasn't, but it hasn't. But what has happened on the mom and pop shop side is the digitization of their businesses,
Hmm.
right? Because there's mobile money. I mean, what is mobile money at the end of the day? Mobile money is just another layer to blockchain, isn't it? I mean, sure, it's centralized and it's managed by somebody, but it's there, it's regulated, it's a real thing. And so I think one of the biggest failures, and this isn't the first time somebody has raised money from crypto to go into private credit in overlooked markets. But what often happens is that they use the blockchain and crypto world to innovate on how the fundraising goes and how
Hmm.
that is managed, but there is no innovation on how the money is then deployed from there. How is risk assessed? How is risk managed? And so, where things are different today than, let's say, even a few years ago, is that
Mm.
the transparency all the way down to the ground is happening on its own through embedded finance. And
I
so
think,
now there's this opportunity to bring the two sides together.
yeah, there's a whole lot of bridging of these gaps, whether it's between um, those that need loans that come, or the technology not being able to before do the things that um, reduce risk for those that are providing the lending, et cetera, et cetera. But all of this is showing how smart asset financing works in practice. You guys, the work you're doing, it pioneers this, revenue based funding tied to connected assets. I think that's really the way to go. But and you've alluded to it a little bit more, but let's go into it in step lower in terms of detail. How does that work in practice? What kind of data signals matter most when assessing risk and performance? And you highlighted what it could look like for the yoga studio, but could we dig into that a little bit more? Because I find
Yeah, it's a
data
great.
side fascinating.
It's almost as if I queued up this question for you. Yeah, when people say data, kind of data, right? That's a big word. There's all
Mm,
sorts of different kinds of data,
mhm,
and I think a lot of people assume or just think, oh, it's financial data.
mm,
It's like, oh yeah, your accounting, you're digitizing your accounting and you're integrating with accounting systems, or even one layer below that, you're um, integrating into your bank statements or your financial transactions and your actual transactions data. Yeah, all that is good. All that is necessary, by the way. But you can go actually 2 or 3 layers deeper than that, what I call operational data.
mm,
And I think that's where the gold mine is when it comes to risk management. Because with operational data, you can get additional insights into risk that is just simply not possible with accounting data or even bank transactional data.
yeah.
So let me give you an example. Um, we have partners that do pay-as-you-go electric vehicles, right?
Okay.
Electric scooters, electric motorcycles, etc. And you can view their daily activity. You can view the average battery swaps they do a day. And even if their payments look okay, if there's a sudden
Mm,
drop in that asset activity, well, there's some additional risk there.
yeah.
And so that clues you in and forces you or should drive you to looking a little bit deeper into the health of their business. That's not possible if you're just looking at financial data. Um, the list goes on and on. So, again, if you try to do that in a traditional world, it's like, hey, Mark, it's time to give me some of your data now. Can you send me, a data dump from your database on your operations? You're like, okay. You send me a CSV file. We have to
Yeah.
sort. It takes me 3 weeks to sort. That doesn't work.
I've got to trust it,
You
I
gotta trust it.
yeah.
It's just not very efficient, right? But with modern data management technology, Snowflake, Databricks, you can literally suck in all the data from your data systems. And then we can sort through it and normalize the stuff that matters.
Mm,
And so now we can create performative metrics that are normalized across performance metrics, I should say, normalized across different companies and start comparing and benchmarking and looking at things in a much more standardized way. Now, again, doesn't take away from the due
Yeah.
diligence you should do,
Yep.
doesn't take away from the you company specific metrics that you probably want to look at.
Mm.
But by being able to compare it in a normalized way across different companies, you can actually scale much more easily than if you just try to do it the old way.
I think it's really interesting because like analytics and data is one of the promises of a blockchain connected kind of world. And yet we've seen so many projects not really hone into that aspect of it. Like if you just had these smart systems, as you're doing here with financing, it changes how we're able to
Uh,
measure things. It's like the analytics revolution that you see in whether it's Moneyball with baseball or it's the analytics revolution that the Houston Rockets did and everyone else does now with basketball, Golden State Warriors, obviously you being in San Fran.
yeah,
It's interesting like what it was like before the world of, that changeover and what it is like after and,
yeah.
things have changed. People have
And I
realized.
think people underestimate the complexity of that data world.
Yeah.
And how much has changed in the last even 10 years, right? There's a reason why Snowflake and Databricks make a lot of money, right?
Mm,
It's powerful what you can do with better organized data. But I just give you a couple of examples.
mm,
If you don't have the ability to capture the data in a way that is manageable,
mhm.
well, you can have all the data in the world, it won't matter.
Yeah,
So the capture and the management of that data into something that then is accessible, and I'm going to say that in a very broad, abstract way, and I'll
sure.
give you an example. It's so critically important, right? That could be, the way we do it now, which is we suck in and ingest data from all these different sources, put it all in one place, then extract out of that a normalized data structure, which then can be read by a standard database.
Mm,
And then BI tools, any BI tool can now
yeah.
access it. Okay, well, I mean, there's a task there, but that's nice.
Mm,
But even moving forward, and I don't want to represent that we're doing this yet, but we're
mhm,
not that far from it. If we then take all that data and the analyses that our partners or our fund manager partners and the ones who are actually doing the deals and doing the risk management and so on, and they put it into normalized metrics with human commentary
mm,
stuck into, let's say, a PDF or a bunch of files that actually describe in relatively real time, right? A analysis done every month
mm,
by on the ground analyst backed by normalized metrics. Well, then if you actually layer on top of that a RAG or a
yeah,
retrieval augmented generative AI system, now you can create a natural language interface
yeah.
to query all this incredible intelligence in almost real time. You can ask, "Oh, how did this small yoga business do?" Uh, Let me ask a real question that could be
Sure.
asked of the example we gave earlier with mind body is like, which regions of the company have the best performing yoga studios? So I want to direct my money there.
Mm,
And, data scientists or even, somebody who likes data a little more can probably go through the data and figure that out themselves. By the way, that was one of the first things I did. I worked for
mhm,
Cisco right after in grad school, actually, in grad school and right after grad school in the mid 90s. And you know what I did? Every day I would download the databases of every single database, all the data from all the databases at Cisco.
mm.
I would simply normalize data. It took me a week. That
Wow.
would usually crash my computer because there were so many lines in my Excel back then. And then the executives would ask me very basic questions. Who are our top 10 customers? And I tell them. And then it's like, well, what do they buy? It's like, wait. And I'd go and do the analysis, go through and normalize all this because there's no one place you can go to because there are all this data systems that are fragmented. Imagine that in the real world, it's even more fragmentation.
Absolutely. Yeah.
But if you have a company like us who's organizing that data,
Mm,
even in putting it into, let's say, natural language analyses of these companies, then layering even a basic chat GPT capability on top, you make it accessible with natural language queries.
I think that's it speaks to a lot of the crossover that we're seeing with AI helping what people are able to gather, but the AI cannot help unless you actually have access to the data. So you need these systems in place. So I think it's arguable that they go hand in hand. Now let's get over to the risk, FX, and let's call it fragmentation side of things. Emerging market finance isn't easy. We know that. It's got FX swings. It's got patchy infrastructure. There's these things that need to be taken into account. But what have you learned? Because you've done a good amount of
Yeah,
travel. What do you learn about managing risk and scale across 15
yeah,
countries, is it, or is it more?
yeah, more than that. I mean, look, I won't sugarcoat it. I mean, it's been a really hard process, right? And we've made our mistakes, and we've seen a lot of issues with currency volatility and fluctuations.
Mm,
Um, and so, the way we try to manage it and the ability to manage this is really about diversification
mhm,
across geographies, across sectors, across currencies, across counterparties, so that you really have the diversification, so that if one fails, it's not going to be catastrophic or as catastrophic. Um, I think one of the reasons we have really spun out EMBD or Embed as a you know pure play tech focused operation from the original impact focused entity is that we realize that just focusing on Africa and just focusing on impact investing is, is selling the technology short.
mm,
And sure, there's a opportunity to apply this in an impact setting that is transformative for impact, but it also has the opportunity to be applied to overlooked markets around the world.
mhm.
And so, the more we broaden the geographies, sectors, counterparties, types of businesses that we are applying this technology to, the less of a risk, political risk is, currency risk is, etc. And that's what needs to happen. We need to go truly broad-based diversification with this model.
I think that's it's a game of reducing risks, which only really happens when you introduce new ways of doing things. And so I think that is really interesting. The blockchain infrastructure part of things, where does that and specifically Redbelly help in, this let's call it working in emerging markets?
Yeah. So blockchain doesn't help to reduce any of their emerging market risks. Just be very blunt, right?
Very
The
good.
digitization is what does it, the digitization.
Yes.
But what it does do is reduce the trust risk.
Mm, yeah.
Who you have to know or understand a organization's track record or know the person, shake their hand, to really do that. What we're trying to do is say, no, actually, you don't have to necessarily just trust that person. You can see it for yourself.
You can
You know,
verify.
you can verify it yourself. And I think that's what's key because at the end of the day, there are so many overlooked markets, not
Yeah.
just emerging markets, right? Oh, so many overlooked markets. And there is no one fund manager, no one aggregator that understands a diversified enough market to really make it work. I mean, that was our experience with Africa, right? We suffered when the African markets, were shaky.
Mm,
We're overly focused on impact in Africa. But now with Embed, we can have a global scope and really focus on all the markets around the world. And so I think that is a important shift and simply let people see for themselves what their
yeah.
track record is. Not rely on us or other fund
Mm,
managers to
mhm.
manage the risk, but to let the performance metrics speak for themselves. And and this is what I think is a key part of the blockchain world, is to be able to do it with very relatively short cycles
Mhm.
so that you can reduce that risk. And I don't know, I'm an economist by background. I don't know what, I'm sure there's a term for this, but by reducing the time frame that you're working with, you can dramatically reduce the risk. Right? I
Mm,
mean, a certain extent, it's encapsulated in an economic idea through discount rates, right? The longer
Yeah,
you wait, the
of
more
course.
risk it is, right?
Yeah, yeah,
That's why IRR matters and all those things.
yeah.
But at the end of the day, you can bring your iterative cycle down to a few days or a month. You greatly reduce your risk.
I think that's it. There's a whole heap of risk that people do not realize that they face every day. You know, working in a place and not knowing whether or not your employee has the money to pay you because we don't have not escrow systems, but just visibility and transparency there. Now, arguably, there's a line where certain things shouldn't be fully transparent. There's commercial confidentiality, but it just is a small example of the risk that we face every day. And for others, it's greater. And by being global, I think that you guys can have an ability for investors to go, well, I want to go to this part of the globe in terms of where I want my risk to be. My money to be put to work, and this is the risk that I'll accept. And others will have different kind of levels. I think just making that available is really key. You guys created, let's talk about the tokenized private credit vaults. Embed, Raise, Redbelly recently announced that there was $100 million tokenized private credit vault. What's inside that vault? How does tokenization improve transparency, compliance, and investor access?
Yeah, so the tokenized vault is in one sense similar to simply tokenizing a private credit fund, if you want to think about that. It's almost like an interval fund. Um, but I think the main difference is, and so as a token holder, you essentially have access to the revenue streams coming from the deployment of the capital through that vault. I think the difference is with tokenization is that again the time frame that you're talking about is a lot shorter. So
Mm,
instead of doing an interval fund where your minimum hold is a year or 2 years, and your withdrawal period might be 5% every quarter, you can actually see and have the flow of money be so efficient and fast and transparent that you can do a 1 month vault. And so, really, what we're taking is all these revenue streams, putting it into this vault, and bringing in the capital from the crypto world and flowing it to these revenue streams. So allowing essentially an embedded, let's say mind body or an
mm.
embedded finance company to forward flow sell the future revenues, future receivables for cash today, but then you can actually capture the receivables digitally.
I think it's really fascinating in terms of like how that new type of economics could work because arguably a lot of this stuff, as you were saying before, whether it's emerging markets or otherwise, it's just a risky kind of bet for a business to take. This is why banks have risk departments. This is
Right.
why, a lot of stuff is analyzed and measured before invested in. But if you're surfacing better data and at the same time, you're giving people an ability to access these things where they would have fallen out, they weren't in the Goldilocks zone. I think what you're doing really is increasing the size of that Goldilocks zone for all parties involved in something like this, reducing risk, increasing access, all through the platform that you've got. It's a lot of exciting stuff. I want to jump to as we're rounding out the looking ahead part, growth, partnerships, pipeline, all things like that. What's next for Embed Finance that you can tell us today?
Yeah, so I alluded to it a bit. I think again the value chain is quite long, right?
Mm,
We could ourselves get involved into a lot of on the ground investing, which is what we did prior to Embed. A lot of action on the ground in Africa and so on. I think what we're moving towards is being that intelligence layer and really focus on being that intelligence layer. So validating the data and the performance of the investments made by on the ground fund managers in
mhm,
Southeast Asia, in Latin America, and Africa, and making that available. And so, two things that I think are quite exciting. One is making that intelligence layer and making that final connection to that generative AI piece
mm,
so that we become, if you will, the foundational intelligence provider
yeah,
for generative AI natural language queries. So that's one. Second
Exactly.
is just continued geographic expansion, right? Historically, we started off in Africa. We've done a little bit of Latin America, but I
Mm,
think the world is much broader. It's an
mm,
imperative, really, if we want true diversification. We need to be in Southeast Asia. We need to be much more in Latin America.
mhm.
We need to even go after developed markets, the US and Europe, and look at overlooked markets there.
Yeah.
Even provide financing to companies like Paraffin and people like MindBody. And so I think ultimately we want to be that intelligence there that connects the Web3 or the digitally savvy world who are eager and understand and appreciate the value of digitally native products,
Mhm.
digitally native financial products, just like in the Google, Yahoo,
Yeah.
Internet, Twitter sense, digitally native financial products, and the and really connecting that to this embedded finance world
I
all throughout the world.
I think, that it's a great opportunity for people to look into this. The last one on this, like, growth thing is, are there any milestones or partnerships or that the Redbelly audience should keep an eye out for as these next phases unfold? Is there anything that you can say that they should start keeping an eye out
Yeah.
for? Maybe even just
Well,
allude to anything like that?
yeah. So I think on one hand, it's entry into these new markets.
Mhm.
I'm sure there are folks in your audience who know companies like the ones I described, and I think fragmentation is the key piece here, right? There are many, many that we've never heard of. And so we want to bring them into this platform. So I think going into Southeast Asia is a big one for us. We're not there yet, but we would very much like to find partners that are active in Southeast Asia. And the second is what I alluded to, the being able to launch a platform that is available to agentic AI, or at least available to be assessed by generative AI, right? So going from a very much database analyst dashboard type approach to a lot of that intelligence is now written down into these files or these repositories, which then can be scoured by generative AI. I think that's the next step that we're quite excited about.
Well, that's really interesting. And, coming from that world of AI, like, I'm certainly curious as to, like, how all of this can play out, because I see a lot of potential given what you've described there. There's a lot of insights that you're capturing that can be trusted because, we're using blockchain tech, the immutable nature of that. Or how do you put it to work by providing that in these different ways? And you've mentioned a few, but there's stuff that we can't even imagine yet.
Yeah.
I'm sure that people in the audience are going to want to tap into and learn more about this. For those that are in the community, whether they're developers or institutions or investors who want to collaborate and just learn more, where should they start?
Yeah, they should reach out to me directly. We're a small team and we're very hands-on and engaged. So they can email me directly at jim@embd.finance, as they see on screen, jim@embd.finance, and I promise we will respond.
Fantastic. Well, Jim, thank you so much for your time. I'll let you get back to your day and looking forward to